Hello everybody, my name is Mark. Welcome to another one of my investing videos, and in this video is a repeat of another video that I did on the covered call strategy, and the sound quality was not that good because at the time I just started doing videos and I was too cheap to invest in a decent microphone. So now I have a decent microphone and we're going to get better sound quality, so hopefully you will enjoy this video again with better sound quality. So let's go ahead, jump into this, and let's talk about the covered call strategy and why I think selling in the money covered calls can be a good idea. Now for this video, I'm choosing Tesla stock as my example. The reason why I'm picking Tesla is because it is nice and volatile. This here is a 1-year chart on Tesla. You can see it has a low of about $250. It has a high of about $390. That's about a 40% swing up and down over the last year. And normally if you were to buy or day trade or invest in this stock, it could be very risky, but you can, if you wanted to, buy 100 shares of this stock. And right now, today is March 19, 2019. It looks like it's dropping in the pre-market hours. Market opens in less than an hour. If you wanted to, you could buy 100 shares of this. It's going to cost you $26,500 and some change, and then you could sell to open a call option. And what I'm going to tell you to do is to pick an in-the-money call. And the call option that I'm going to pick is down here, the $250, because that is the level of support that we're looking at in this range. Now you may be scratching your head and thinking, wait a minute, doesn't that mean the shares will get called away and I'll lose money? Yes, your shares will get called away. No, you will not lose money, and I will explain it right now. So here we go. Let's go to the option chain and let's look at the 30-day $250 call option. Let's find out what happens here. Okay. So click the in the money and let's look up the $250 call. So we click on this $250 call like this, put sell to open, and we go to our little box, sell to open, put in one contract, and let's put in $30 like this. The bid is $29.85, the ask is $30.60, so I'm going to put in $30, click the review order button, and there you go. We get $3,000 for that trade, and then we click the place order, and you would be the proud owner of 100 shares of Tesla, and you would be the proud owner of this call option short. You would be short. Okay. Now, what happens if Tesla stock goes up? What if it goes down? And what if it stays flat? Now, let's say for the next 30 days it stays flat and it closes at where you see it at right now, 266 and 59 cents. Well, here's what's going to happen. Let's go back to our option chain here and let's go back to our in the money call. Okay. So if indeed in the next 30 days Tesla closed at 266 whatever, yes, you will be obligated to sell 100 shares of Tesla at $250 a share, because you are selling that $250 call option. And so because you're buying Tesla at, let's say, $266 a share, then that means you will take a $1,600 loss. Okay, but that's okay, because look, the bid is $29.85, the ask is $30.60. So remember, we're getting $3,000 to lose that money. That's a good thing, right? So yes, we lose $1,600, but we make $3,000. That means that we make a net profit of $3,000 minus $1,600. We will make a profit of $1,400 if Tesla stock stays flat. Now, what if Tesla stock went up? What if it goes all the way up to $300 a share? What if it goes up to $1 million a share? Well, every dollar it goes up, the value of the call will go up $1. So we lose $100 in the call, but we own 100 shares of Tesla. So we make $100. That means that you make $100, you lose $100, it cancels out, and we would make the same $1,400 of a profit. Now, what if Tesla goes down? Let's say Tesla goes down to $250 a share. What would happen? That would mean that this contract would go down to zero in 30 days. And then we bought Tesla at 266, so we would lose $1,600, but we would make the $3,000. So again, we make the same $1,400 profit, right? Value, if Tesla closes at $250 a share, then this contract will be worth zero. We bought Tesla at $266, so 266 minus 250, we lose $1,600 in the shares, but we made the $3,000. So you can see, hopefully, that selling in the money covered calls is a good money making strategy, even on a volatile stock like this. Now, if Tesla stock keeps going down, let's say it goes down to 240, now we start to lose a little bit of money, okay? Because now, remember, we're buying Tesla at $266 a share. If it goes down to 240, instead of losing $1,600, we lose $2,600. But we still make the $3,000 in the premium, so we're still going to make $400 in profit, right? So you see what's going on here? Your in the money call is creating a hedge. It is hedging your position in Tesla stock. So hopefully you can see the covered call strategy can be a very good way to hold on to a stock that you like. And it can hedge you all the way down to $240 a share. Now we got $3,000, so that means that Tesla stock can drop $30 a share. So if we buy Tesla stock at $266, that means that if Tesla goes down to $236 a share, we just break even. We don't make any money and we don't lose any money, okay? Because we bought Tesla at $266 a share. If it went all the way to $236 a share, that's a $3,000 loss. But we still make the $3,000 in this covered call. So selling in the money covered call actually is a hedge, okay? Now, the mistake that most covered call people make, people that sell covered calls, is they think, I don't want the stock to go up. I don't want my shares to get called away. I want to sell, like, let's say this out of the money call, right? Let's go to out of the money. And I'm going to sell this really far out of the money call because I don't want my shares to get called away. So they'll pick a stock they'll pick a call like all the way up to $300. Okay, and the bid is $575 and the ask is $585. So let's say you get $580 for that, okay? And then they buy 100 shares of Tesla stock at $266. And then they sell to open this call option. They get $580. Now, what if Tesla stock went down that $30? Well, that'd be a bad thing, wouldn't it? Right? Because, yeah, congratulations. You'd make $580 in the covered call. Good for you, but your stock went down $30 a share. You're down $3,000, okay? Now, you are going to make this $580, so no, you're not down $3,000. You're down like $2,500. You're down like $2,400 and some change, okay? Does that sound like a good thing to you? Do you like losing money? Because that's what people do when they sell covered calls. They pick these out of the money calls and then they tell themselves, oh, I want the stock to go down. I don't want my shares to get called away. But that is completely backwards. When you sell a covered call, you want the stock to go up. Imagine if you would buy Tesla stock at $266 a share and then you sell this $300 call option and then Tesla actually went up to $300. You would make a ton of money, wouldn't you? Right? Because that's $34 increase in the price and you get this $580. So you would make a nice, $3,400 plus this. So you'd make almost $4,000. So you want the stock to go up when you sell covered calls. And if the stock goes higher than the strike price of the call, that's not a bad thing. Okay, because every dollar it goes up, yeah, you are going to lose $1 in the call option, but you own 100 shares, you're going to make it back in the stock. That's the reason why the covered call strategy is called the covered call strategy, is because the stock covers your call. You cannot lose money in the intrinsic value of your call. If you're going to lose money, it's going to come from your stock. So that's it for this video. Hopefully you like this video and I've given you some good ideas about how to be a better covered call trader. And as always, if you have any questions or comments, feel free to leave in the comment section. And hopefully you like this video better than the last one I did a few months ago. With the not so good sound quality, this video has a better sound quality. I have a better mic. And thank you for watching. And until the next video, have a good day, and I will see you in the next video.